General Motors stock is making headlines as investors react to a major boost in full-year guidance. The Detroit auto giant reported an improved profit outlook, signaling strong performance despite ongoing challenges with tariffs. GM now projects full-year EBIT between $12 billion and $13 billion, up from a prior range of $10 billion to $12.5 billion. Adjusted automotive free cash flow is expected at $10 billion to $11 billion, while adjusted EPS is forecasted at $9.75 to $10.50, exceeding prior expectations. This jump in guidance comes as a relief to the market, especially considering the uncertainties from President Trump's auto tariffs, which have loomed over the industry for months. One of the key drivers behind this optimism is the improved view of GM's tariff exposure. The company now estimates that full-year tariff costs will land between $3.5 billion and $4.5 billion, down from prior estimates of $4 billion to $5 billion. This calculation assumes current levy rates remain steady and indirect costs from suppliers hold as expected. GM CEO Mary Barra emphasized that the company's performance justifies the upward revision, highlighting confidence in GM's trajectory and operational strategy. Pre-market trading immediately reacted, with GM shares jumping 8% as investors cheered the news. Mary Barra also addressed recent government updates on tariffs, expressing appreciation for the president and his team's adjustments. She pointed to the MSRP offset program, which is designed to make U.S.-produced vehicles more competitive over the next 5 years. Barra underlined that GM is well-positioned to take advantage of these changes, given its significant domestic sourcing and manufacturing footprint. Tariff mitigation efforts are expected to offset about 35% of costs, thanks to a lower tariff base. These developments underscore GM's strategic planning to minimize risk and maintain profitability in an environment of regulatory and trade uncertainty. Looking specifically at the third quarter, GM reported net revenue of $44.26 billion, slightly below Bloomberg's estimate of $45.18 billion. Despite that, adjusted EPS came in at $2.80, well above the $2.27 expected. Adjusted EBIT reached $3.376 billion, surpassing the $2.72 billion consensus. Tariff costs for Q3 were reported at $1.1 billion after mitigation efforts. GM's approach to incentives also stood out, with incentives at 4% of average transaction price, significantly lower than the industry average of 6.9%. These figures reflect the company's disciplined pricing and operational efficiency while navigating a complex economic landscape. GM's sales performance this quarter further reinforces its market strength. The company sold 710,347 vehicles, an 8% increase compared with a year ago. It claimed the #1 spot in U.S. overall sales, achieving its best market share since 2017. The gains were primarily driven by gas-powered vehicles, including heavy hitters like the Chevrolet Silverado pickup and GMC Yukon full-size SUV. GM indicated that these categories are expected to continue leading the industry through the end of the year, showcasing strong demand for traditional vehicles even amid growing EV adoption. Speaking of EVs, GM's electric vehicle sales hit a record in Q3. The automaker sold 66,501 EV units, a surge attributed to buyers rushing to take advantage of the $7,500 federal EV tax credit before it expired. This milestone is significant for GM's transition strategy, showing that the company can compete in both traditional and electric segments effectively. The combination of robust gas-powered vehicle sales and a strong EV performance demonstrates GM's ability to balance diverse market demands, keeping both investors and consumers confident in its growth trajectory. The stock market's reaction to these results highlights investor confidence. GM's shares jumped sharply in pre-market trading, reflecting optimism about profitability, reduced tariff exposure, and strong sales numbers. Analysts are taking note of the company's strategic investments in domestic manufacturing and sourcing, along with disciplined incentive spending. By maintaining control over operational costs while responding effectively to regulatory shifts, GM is sending a clear message. It's resilient, adaptable, and poised to thrive despite market and geopolitical challenges. In summary, GM's Q3 results and updated full-year guidance paint a picture of an automaker on the rise. Strong gas-powered vehicle sales, record EV performance, lower than expected tariff exposure, and disciplined operational management all contribute to the company's upward momentum. Mary Barra's leadership and strategic vision continue to resonate with investors, while the market rewards GM's focus on profitability, domestic strength, and adaptability. As the automotive industry faces evolving tariffs, competition, and technology shifts, GM's latest performance shows it is ready to lead both today and into the future. Beyond the numbers, GM's performance highlights the company's strategic flexibility. The automaker has been adjusting its product mix to match consumer demand, emphasizing popular pickups, SUVs, and electric vehicles simultaneously. The Chevrolet Silverado and GMC Yukon remain key revenue drivers, showcasing that GM's traditional vehicles continue to dominate the U.S. market. Meanwhile, record-breaking EV sales reflect the company's ability to pivot toward future technology while capitalizing on government incentives like the federal EV tax credit. By balancing legacy and innovation, GM demonstrates a roadmap for sustainable growth in a rapidly evolving automotive landscape. Investor confidence isn't just tied to sales or guidance numbers. It's also linked to GM's disciplined financial management. Tariff mitigation strategies, a lower incentive spend compared to industry peers, and careful cost control have all played a role in maintaining profitability. The company's focus on domestic sourcing and manufacturing ensures that it can absorb external shocks like tariffs more effectively than competitors. CEO Mary Barra's proactive communication with shareholders also reassures investors that GM is prepared to navigate uncertainty while continuing to pursue long-term strategic objectives, keeping the company financially resilient and operationally efficient. Looking ahead, GM is positioned to maintain momentum into the final quarter and beyond. With ongoing investments in EVs, a strong lineup of gas-powered vehicles, and improved tariff management, the company is not only protecting current profitability, but also preparing for future growth. Analysts expect GM to leverage its competitive advantages, including brand strength, manufacturing scale, and technology development, to capture market share. The combination of robust operational execution, strategic foresight, and adaptability to changing trade and market conditions paints a promising picture for investors, signaling that GM is ready to thrive in both domestic and global automotive markets.